Welcome back to the Global Business Report here on the Rise News. World Trade Organization, of course, international body dealing with the global rules of trade between its members. Its main function is to ensure that trade flows as smoothly, predictably, and freely as possible with a level playing field for all its members. You're looking at the cover. It's a new report on global trade outlook and statistics. We're happy to have Chief Economist of the World Trade Organization, Ralph Ossa, who joins us from Geneva. Good afternoon. Thank you so much for joining us, Ralph. Well, kicking things off, your World Trade merchandise trade volume declined in 2023, 1.2%, but you're projecting a rebound. What is the trigger for that rebound in 2024 and 2025?
Well, thank you very much for having me. And you're right, we're predicting the volume of merchandise trade to grow by 2.6% this year and then by 3.3% last year. And if you want to understand the strength of world merchandise trade this year, next year, I think you have to understand the weakness last year and where this was coming from. And the weakness was really driven by inflation, and in particular by inflation in Europe. So what we saw is that high energy prices, high inflation in Europe really dragged down demand, particularly demand for traded goods like consumer durables, but also investment goods. And then, given that Europe has such a large share in world trade, then also that fed through to world trade. And we are seeing these problems easing. So this year, Europe is not going to be a drag anymore, and then next year it's going to contribute to the growth of world trade again.
Thank you so much. So I want to read an outlook on inflation from your report, which says that in 2024 and 2025, inflation is expected to gradually abate, allowing real incomes to grow again in advanced economies, boosting consumption of manufactured goods. Now, at the top of the hour, we were looking at the latest inflation figures from the United States, and they do remain sticky. I know the U.S. is just one developed nation, but, are you sure your inflation outlook will play out?
Well, of course you can never be sure, but it's our best guess. And as you rightly observed, it's really, the main story was about Europe, not so much about the United States. Also because the United States has had other things going for it, such as a very strong job market. So we're not seeing the problem to go away, but it's going to abate over time, which is why Europe is not going to contribute to growth of trade this much, but then next year it's going to. We think.
Okay. The report also does mention, downsides to that outlook, particularly geopolitical concerns and so on and so forth, Middle East, the Suez Canal, the Red Sea. I do have to bring up China. Everyone seems to be complaining about China. U.S. Treasury Secretary Janet Yellen in Beijing talking about China's overcapacity distorting prices. The EU complaining about China's subsidies for electric vehicles. They might bring up tariffs. South Africa and e-commerce firms complaining about China firms like Temu exploiting tax loopholes. Is China's manufacturing might a risk to global trade?
So we're not looking at China specifically. We're looking at Asia as a region, and we're also not looking at individual sectors such as electronic vehicles, even though we're going to have a piece on this later this year, but not in this report. But what I can say is that if you look at Asia as a region, and of course China plays an important role there, we don't see an export surge coming this year or next. In fact, what we see is the export growth in volume terms being more or less in line with GDP growth. So it's kind of a relatively normal evolution, I would say.
Okay, forgive me for harping on China, but and I know you're the chief economist, you don't handle disputes, but they did report the United States to the WTO targeting U.S. Inflation Act, saying that act has unfair subsidies. Again, on electric vehicles, you've already said that the report's not specifically looking at that. How do you think all this plays out as far as the economic impact, this back and forth? Because you recently, when I say you, not you, but the WTO recently ruled in favor of China with a 1021 dispute against Australia. So how do you think all this plays out?
Look, I can't comment on individual disputes, but I can give you my take on industrial policy more broadly, because it's happening all over the world. You mentioned the US, China, the EU, of course, also other countries are engaging increasingly in industrial policy. And we can discuss of course, the economic effects of industrial policy. And it's actually interesting because often they're not so clear. Say, if you provide a subsidy to electric vehicles, of course, it's a problem for electric vehicle producers in other countries, but it might be good news for consumers who get cheap electric vehicles. So the economics is not so clear. But what is very clear for us is that we have to make sure that whatever subsidies countries impose, that they comply with WTO subsidy rules, because otherwise industrial policy is going to be, or the rules-based trading system is going to become the collateral damage of industrial policy, and that is, of course, not something that we want.
Indeed. The report does mention the Suez Canal. Mm-hmm. What's your assessment of the impact of rising tensions in the canal and what it means for global trade?
So it's interesting because, of course, the Suez Canal is an important trade route for international commerce. About 1/3 of container shipments between Asia and Europe go through the Suez Canal, 12% of world trade. So, of course, if there's a disruption there, that's also going to affect international trade. But the big picture, if you just think about the kind of aggregate impact, the macro impact, is that we are not seeing such a big impact at the moment. And I think the story here really is that supply chain pressures are not quite as high as they used to be during the pandemic, when, for example, the Ever Given, this Chinese ship at the time, blocked the Suez Canal. And for example, we have more shipping capacity now, so taking the longer route around the Cape of Great Hope is not that much of a problem. The shipping capacity is there. The freight rates are not that high. Demand in Europe is not that strong. So at the moment, it's not that big of a deal, I would say, for the aggregate numbers. But we're watching it carefully. And the big risk here, I think, is an escalation of the conflict in the Middle East in a way that would affect energy markets. Because then if oil prices rise significantly, for example, then, of course, the story is going to be different.
Yeah, indeed. The pass-through inflationary effect. On Africa now, I wanted to get your thoughts on the Africa Continental Free Trade Area Agreement. Trade within Africa is pretty low compared to trade within Asia, Europe, North America, and so on and so forth. What do you think of the AFCFTA, and what needs to happen to boost trade within the African continent itself?
Well, first of all, if you bring up Africa, let me celebrate that Africa is the region that is going to experience the fastest growth, both in imports and exports this year, albeit from a relatively low base. But I think it's just something we should recognize, especially because you were mentioning that Africa does need to catch up in international trade, but the dimension that you highlight is, of course, an important one, which is the within Africa trade, which is also why the the Continental Free Trade Agreement is so important. I also would like to bring to your attention that there's a trade facilitation agreement in the WTO, which is not about reducing tariffs, but it's just about making trade easier. Simple things like streamlining customs procedures and so on. And in our estimation, that's exactly the kind of trade cost reduction that benefits Africa particularly. So it's also going to be important to continue implementing this trade facilitation agreement on the continent.
All right. Now, I want to ask you about technology and its role in boosting trade. Of course, we here at Arise News is all over the world, but we're here in Nigeria, we're really proud about Dr. Ngozi Okonjo-Iweala, of course, who's the Director General. The last time she was here recently, she was talking a lot about digital trade and how technology can boost it. Can you bolster that point and talk to us about how? Because it's in your report as well, a section on digital, how tech can boost trade. How can technology boost trade, and why should we leverage more on it?
Well, so one thing we've been seeing for a long time now is that digitally delivered services, so all sorts of services that are transmitted to computer networks, think of programming services, marketing services, accounting services, some kind of financial services. I mean, there's a whole range of these services. That's a very fast growing segment of international trade. It's going faster than goods trade. It's going faster than other services trade. So that is really what we think of as the future of international trade. The Director General keeps saying that the future of trade is digital. And then the question is, of course, how can can Africa and Nigeria in particular take advantage or position itself in the future? And I think what you need is you need the right hardware and you need the right software. I mean, with hardware, it's the obvious thing. You need the right internet connection, you need the right skills. But with the software, what I mean is you also need the right regulatory environment. And we are committed also under the leadership of Dr. Ngozi to really support the African continent in leveraging this opportunity.
All right, we're rounding off. We've got less than a minute to go. I just wanted to ask you, in terms of currencies, do currencies play a big role in facilitating trade? Should continents follow the European model and adopt each continent with a central currency? Or are we good the way we are? Can trade still be facilitated in a healthy manner with different currencies around the world?
Look, it's something that we don't go into in this report. I mean, I could discuss some of the evidence that I know, but I'd rather stick to what we say here in this report and focus attention on the geoeconomic fragmentation because I think that's really the key issue that we're facing today, and also trade policy uncertainty. We haven't really talked about that, which is I mean, we have more than 50 elections happening this year in all parts of the world, and I often say, the work of the WTO is similar to the work of a central bank. It's not just about inflation, it's also about inflation expectations, and our work, not just about trade costs, but also trade cost expectations. We want to convince the market that trade costs stay low, and this is why we need a rules-based trading system, and that's why we need the WTO.
Very actually, excellent point. So do you want to quickly talk on that about 30 seconds? There's the UK elections, US and everything. Could there be a black swan? Is that what you're referring to that could maybe upend things later on this year?
Well, look, I don't want to single out now an individual election, but of course, what we see is that the whole narrative surrounding globalization is changing. There's all this talk about homeshoring, reshoring, friendshoring, and so on, and we're beginning to see this show up in trade policy choices. We already discussed industrial policy, and we're beginning to see this show up in the trade numbers. We talked about fragmentation. So, of course, this is something that we are concerned about.
Chief Economist at the World Trade Organization, Ralph Ossa, thank you so much for taking the time to join us from Geneva to talk about your latest report. It's a great report, very informative, and we appreciate your time.